G'day everyone, it's Angelo Remora here. I'm your favorite Australian and the real estate dingo, and I'm bringing you a very dirty blog today. And the blog consists of this. Is it a smart idea to invest in ghetto properties / pig properties / $30,000 properties, whatever the hell you want to call them? I'm going to give you some suggestions, some pros, some cons, and just an overall take on what I think. So let's get started. So guys, one of the key components that I want to focus on here, and for those of you that have known me for a while now, I'm a big believer in finding the right people, okay? Before you start any kind of business endeavor, real estate investment, whatever it may be, I always say you need to find the right people first that understand the market, that understand your needs, that are not after instant gratification, that are happy to have that, delayed gratification type mindset. Plant the seed now, reap the harvest later. Like with anything, the same goes for investing in these dirty, ugly, crappy pig properties, $30,000 properties, whatever you want to call them. And I've got a saying and it goes like this, and I mentioned that in one of my previous blogs. If you buy the best house in the best street, in the best area that has the best capital growth projections, but your property manager is incompetent or a cheat, you're going to lose money because he's going to steal or lose or misplace your rent. So it really doesn't matter how sexy the numbers of a particular area or deal are if you've got the wrong people. Now, I'm based in Toledo, Ohio. We're around an hour's drive from Detroit. I personally know of investors that are making millions and millions of dollars in the heart of the Detroit ghetto. Now, for those of you that don't know, Detroit has gentrified a ton and there's a lot of awesome things happening there, but let's just focus on the ugly part of it. Now, why are these guys making so much money? Guys, they're making the money because they have the right people on the ground. Yes, their property managers are probably collecting rents with bulletproof vests and shotguns and Hummers. It doesn't matter, but they're still collecting the rent. They know how to collect the rent. They were born and bred in that particular town, and they're fair enough to deposit that rent into the investor's account, right? So proof is in the pudding there that yes, indeed, you can make money in these ugly, rough areas. The other thing that I want to touch on is this, guys, and I want to apologize to all of my awesome ladies out there that are watching this vlog, but it is my opinion that to be successful in these rough parts of town, in these bad areas, in these ugly pig properties, you have to have an alpha type male property manager. Now, if there are any alpha type females out there, by all means, you can also get the job done, but ultimately it has to be someone that, as I mentioned, has been born and bred in that area, that knows the ins and outs of that particular property, that particular area, that particular property, and how people tend to function in those areas, right? We're talking about a lower socioeconomic class of people here, and I hate to refer to people as that, but there's no other way to put it. So there's a different type of approach when it comes to collecting rent from those folks and when it comes to corresponding with such folks. One great rule of thumb to keep in mind is when they call that the rent is ready, you go there straight away and collect the rent. You do not wait for the rent to be deposited into your account or sent in the mail. It doesn't happen. You go there within half an hour to 45 minutes and collect the rent. So the property manager, the alpha male or alpha female property manager, they have to be very active and proactive in making sure that they show up on site to collect those rents. A few other things, guys, that I want to touch on is this. You have to understand that if you're investing in these areas, there's going to be a lot of volatility. Some days you're going to be good, some days are going to be bad. Same will go for the particular month or the particular year. So you have to understand that the volatility in such an area is going to be very high, and God knows what's going to happen. Now, with that risk, right, it is a huge risk, comes a bigger reward. Cap rates tend to be much, much higher in C and D class rough parts of town. So you can expect to get anywhere from 14, 15, 16, even 18% in those particular areas. But once again, please keep in mind, the volatility, guys, is very high. You're gonna have good years and you're also gonna have bad years. And the last but not least thing that I wanna mention with you guys is this. When you're investing in one of these lower class areas, guys, your exit strategy is pretty much going to be non-existent. There's very few homeowners that want to live there. There are very few investors that will want to invest there. Unless you're going to scam someone from out of state or country, I don't advise you do that, because that is the lowest of the lowest of the lowest, and you would be disgusting for doing something like that. You're pretty much going to be stuck with this investment property unless you're going to be willing to offload it for literally peanuts, right? And that will kind of bring me to the conclusion of you make money when you buy real estate, not when you sell it. So if you are looking at investing in one of these areas, please buy dirt cheap. And when you do buy dirt cheap, you can pretty much light a match to that investment, because not literally, okay, not literally, you can't light a match to that investment. What I'm meaning is you're lighting your money on fire, because you're not going to get the money back. Look at it in that way, that you're not going to have an exit strategy. You're probably going to have to hold that property for a very long time, and hopefully you are going to make money over the long term, and you're going to get a higher cap rate than you would on any other investment. Look, it's a very unique type of product we're talking about here, guys. Not many people can make it work. If you're out of state or country, I very much doubt you can make it work. The only people that make such investments work are those that are on the ground, that are hustling those numbers every single day, working with good property managers, and making sure that they're collecting those rents and depositing them in the account. They actually do quite well, to be honest. But look, I advise most of you out there watching that you don't go down that path. Now, with that being said, I want to touch on another thing, and that is this. Guys, you can buy some pretty amazing products for around $30,000, $40,000, $50,000 in the Midwest. I'm a little bit biased here. I'm based in Ohio, but I can tell you right now, I've bought some absolutely amazing deals over the last 4 years for 10 to 20 cents on the dollar. Yes, for around that $20,000, $30,000 price range, and these properties were worth over $100,000 on any given day. So don't necessarily classify those $30,000 properties as pigs. Ultimately, the area in itself will dictate if that property is a pig, not necessarily the price. So that's something to keep in mind. But other than that, guys, hey, anyone out there that's finding a lot of success investing in these lower class areas, please comment below. I want to hear from you. I want to hear any other unique tips that you have and how you go about collecting those rents. But other than that, guys, any other questions that you might have, comment below. I'm happy to answer them. But that concludes my vlog for today. So thank you for watching. Once again, I'm Angelo Remora. I'm your favorite Australian and the real estate dingo. You guys have a great day.